morning, good day, good evening, wherever you are on the globe, warriors. Hello, Royal. Nice to meet you. Chimang, hello. Hope things are okay in Singapore. Ren, Kevin, how are you, buddy? Grishankar, Alexandra. How's everyone doing? Doesn't seem quiet to me. Okay. Stay safe, Rami. Pretty good, Sinatra. Okay. So I'm still negative. Crude oil looks like it's flagging here. We need to take out this 39 level to get some acceleration to the downside. Yesterday's turnaround Tuesday trade in the end was successful. Okay, was really down here after this flag, and then I said if we got through 90, we could go to 580. The off number is 1603. You should have taken partials and trail stops back under, say, 85 or so. We start getting back under 90, maybe something else is going on. Okay, so that's that. EG, I'm still negative. Still think that we're going to have something like this, or at least back down to test this low here. But if that happens, I'm expecting 61.8 back, which would be 90, 29, 90, 40-ish. Talked about the off number in S&P being 3330. For those of you who don't know what the 2-week off number is that I use, it's pretty simple. All you do is you count back 2 weeks and look at the close for that week. And it was 33.35. So it was 33.30. Anyway, got up to 33.31. I think S&Ps could fade here. I'm not sure if this is a low. I mean, the RSI reading doesn't look too good to me. Under 30, so maybe we're going to get that push down. That could take us to, major support at the 3,200 level. We'll see. Did something new in Aussie Kiwi. Looks like we're trying to reverse it. I remember when I was short up here, I said, Dale, this is only going to be a correction because of why. Why did I think this was only going to be a correction? Come on, guys. What told me that this would only be a correction and not the high, just a high? Yeah. What about the RSI? No. What did the RSI do with price? I know there's someone out there that knows it. There you go, Sam. All right, so confirm the high, which as a trader tells you that there's a high probability that's not the high, it was just a high, and this looks kind of corrective to me, a flag. So I'm actually looking for, since this was a confirmed high, I'm looking for another high. Okay, I think that's about all I have to say this morning. Oh, they got to the metals. So interesting on the gold, they kept coming back to the breakdown here and then couldn't hold it. Looks like we have 2 drives here. So here's 1, here's 2. Maybe we go up and we get 1 more before we get a rally in the metals. I've been talking about silver being the preferred short for weeks on end now. Gold's down 0.9%, silver's down 4%. And we have a little 2 drivers setting up here as well. And, if you're overseas, you could trade this gold silver ratio. It was a great trade from when I was talking about it down here. Okay, so you have 2 drives up here too, just to give you a little color. I think that we're going to rally to about halfway back. This moving average about 93. So let's see. I know I had to have made at least 1 or 2 bad calls this week. Oh yeah, I tried to top pick the dollar. That didn't work out. Although I've been a dollar bull from the bottom at the 3 drive, I still don't see any reason why to short it. I thought early in the week I'd have a pullback, instead it just went up. I guess you got to call this a breakout, you know, at 94.15. I'm not going to chase it. I have enough stuff going on right here. Pound, oh yeah, pound I thought was going to hold the low. After this, I thought this was a stop hunt, and we're making new lows. We are diverging down here in cable. I don't know about pressing it. And a couple of things that are on my watch list for longs, but not yet, would be Euro yen. I'd like to see one more low, although it's trying to come out of here right now, isn't it? Oh well. Something like that, trying to come out of it. And the guppy, that there could be something setting up here in the guppy too. I thought we'd have one more low. I still think I'm going to wait, although this could be 1, 2, 3. I'd like to see one more dump here. Maybe as the dollar goes up, there'll be a chance for that to happen. Running out of time. Is that what you're waiting for? Okay. All right. Running out of time to take advantage of this, our twice a year promo. Anyone sign up for it during the promo? Pretty good deal. I'd go for at least the 6 months of that. I'm a subscriber. And then, okay, Arena, you finally did it. Oh, okay. And we didn't have to be talking about Amazon. Well, welcome. Thank you. And, we have the summit starting Friday morning. You guys are going to want to get signed up for that as well. The guys will put the link in there. And we have a pretty good guest. He's from Dragnet. His name is Joe Friday. Anyone remember the show? Dragnet? Joe Friday, the detective. This guy's a market detective. Hi, lol. Yeah, you're like me. Yeah, I know. Joe, you remember, though. Tuesday Wells was in it, huh? Okay. Anyway, Joe Friday will be with us at the top of the hour. I've been following some of his tweets. The guy's a great technician. So that's what's on the docket. And I'm going to turn it over to Blake and get his impressions coming into today. Feels like Thursday to me, but it's only Wednesday. So good Wednesday to you, Blake Morrow.
Hey, good morning, Coach. Can you hear me?
Yep. You got that mic figured out now.
Gosh, it's Wednesday. Look, I'm gonna ask you guys for a favor. I don't ask for many things. Coach asks for everything. I don't ask for anything. Do I? I'm just kidding. Coach, are you there?
I'm going to ask your wife.
No, I'm going to ask everybody for a favor. If you haven't done so already, if you can see my last tweet about the Traders Summit event, let me go ahead and if you guys follow me on Twitter and you guys see that Traders Summit event tweet that I just did, this one, let's see if I can do it, find it for you.
You demanding son of a bitch! I'll retweet it.
I am. I'm trying. Well, it's just I'm trying to do. Trying to get this promote. It's really would be nice if I could actually pull up Twitter. Oh, there it is. Okay. So this tweet, if you guys can actually, I did about an hour ago. If you can retweet that, I'd appreciate it. Like I said, we don't ask for much around here. We don't. This is a free webinar. We're here every morning. Without fail, right? You guys come in here every day and you know to expect us. I think we've been how long we've been broadcasting, Dale?
Over
3 years.
3.5. 3.5.
3.5.
Started in April.
Yeah. So it's been quite some time. So, like, you know, again, we don't ask for anything. We're just here. Obviously we want you to
Making
subscribe.
everyone rich.
Well, you know, we want you guys to subscribe to become ForexAnalytix subscribers at some point, you know, when you're comfortable with it. But we're here every day, you know, don't ask for much. So if you can just retweet it, you know, a tweet, I'd appreciate it, you know. So thank you guys for those of you that are doing it now. Okay, so let's talk. And, you know, speaking of, you know, we don't ask for much, but do we give? Well, let's hope you guys, you know, let's just forget the patterns in play, because you have to be a ForexAnalytix subscriber. But let's say you go to the blog every day and you looked at the Aussie last night when the Aussie was trading at, you know, what is that, 70.70, you know, and before it broke through support, sitting right here. Man, I was basically saying, hey, it's going to break down. I mean, you know, hey, if you guys took advantage of that, congratulations. It's been a hell of a move. I think we're approaching some pretty key support. But what's most important, like, about some of these moves here is that we are actually now approaching pretty key support. You know what's also crazy about all this, Dale? I heard Stella's voice. You know what else is crazy about this?
I'm waiting.
We haven't even seen the equity markets really sell off.
Yeah.
So what happens?
We are 8% off the highs.
Okay. All right. Well, okay. I guess you can say that. I mean, you can say that. It's not. I'm not going to argue that we're not. But after a, let's see. After a 65% rally off of the COVID lows, right? Yeah. Oops, shit! I didn't want to do it. Oops, excuse my language, guys. Sorry. Now I'm all screwed up because I don't know what I just did. Okay, I just did this. I think I did that, but I don't know. I have no idea what I just deleted. Oh, no, that's right. Okay.
Okay,
anyway.
We're going to our attendees are retweeting, Blake.
No, they are, and I said thank you. You know, I said I appreciate it. So, yeah, we are off right now. We're off 7% off the highs. You're right, Dale. Yeah. We've had a total of 10% correction. So imagine if we actually correct down towards the 200-day moving average, which I think we're going to, which will be around 3,100. So talking about maybe a 14% correction in equities. What does the dollar do? You know, we've been talking about this. What does the dollar do? We're at 94 right now.
You called it.
You know, the dollar index will be up at what here? 95.5, something like that. That's what I think is going to happen. That's where I think, you know, we're at. I think that's where, you know, that's where we're going. Are we going to go there today? No. Are we going to go there probably over the next couple of weeks? Yeah, again, I'll reiterate, it's a situation where, you know, we've had a reflation trade for a long time. You know, we've had a lot of profit taking, and probably we'll see continued profit taking in some of these moves. You can see it really in the dollar max. I mean, that is a big move right there in the dollar max. We hit the channel resistance, and if you guys follow me on Twitter, you know, we hit that channel resistance yesterday. It has been a massive breakout. Hopefully you guys have made some money getting long that dollar max. I've been kind of scalping in and out of it, you know, taking money out of it here and there. So hopefully you guys have been too. One last thing I want to go over before I go into the actual charts, which I got to put together the bias chart for you. Some of you guys might be wondering, why isn't the dollar Canadian moving? You know, we're seeing the dollar move against other pairs. You know, the dollar Canadian yesterday spent the day consolidating. Today, we have the throne speech, which I didn't even know was coming up. I mean, it's not on the schedule, but it's here's an article on it, just so you guys. Speech from the throne. I'm sorry, I said the throne speech, but it's speech from the throne. That's happening, or coverage looks like it starts at 1 p.m. Eastern today. So just keep this in mind. This is where Trudeau's government's probably going to make a lot of
bullshit.
Promises.
Sorry.
Yeah, it's kind of like the State of the Union, but it could be a market mover for the Canadian. But you know, I think what we've got to expect is they're going to announce a lot of, you know, they're going to try to announce a lot of things that sound positive as we go into the winter season, in not only in Canada, around the world, which is going to bring its own issues with COVID without a vaccine. You know, you lock a bunch of people up inside in the cold with a virus, you know, it's probably not going to do so well, you know, in Canada, places like Canada, and they're already starting to see a spike in COVID related illnesses. So the point I'm trying to make here is they're probably going to make a lot of promises that are going to cost a lot of money, which might in turn weigh on the Canadian a little bit. So just watch this dollar Canadian. We might actually start to move today after this speech from the throne speech, Game of Thrones speech, whatever it is.
You could probably protect if your long profits, say a candle closed back under 2.5. Blake, what do you think?
Yeah, I mean, you know, well, for me, I know that as long as, you know, we trade above 132.60, 132.50, which is the neckline for the inverted head and shoulder pattern, somewhere around here, right?
Right.
So as long as we're trading above here, there's no need to be bearish. And in my opinion, we're moving to 136.50, which is going to be the 38% retracement of this move. That's where we're eventually going. But, you know, we have the 200-day moving average. We have a lot to get through to get up there. I'm just saying that, you know, while we're above 132.50, I have dollar Canadian longs and I have bids at 132.60. I've had them there for the last 3 days and we haven't even gotten anywhere close to them. So you may be sitting here thinking, well, Blake, the dollar Canadian's not rallying, but it's not selling off. And with that whole rally that we saw yesterday in risk, so if you match up, let's see, compare this to the SPX 100. You compare that to the S&P yesterday, we had this rally back in the S&P. Look at what the dollar Canadian did. It didn't go down. Usually what happens is when stocks go up, dollar Canadian goes down. Stocks went up, dollar Canadian held. So if stocks go down, which Dale was saying, hey, I think stocks might roll over here, which I would agree they probably are. You know, we had a day bounce yesterday. We're probably going to start, you know, drifting lower here again. If stocks move down, what happens to the dollar Canadian? Didn't go down. So it's probably going to push higher. So, but we have to get through this Game of Thrones speech, which is coming up. Okay. So let's talk about all the charts. So, let's start here. Euro dollar. We're trying to get below 117. If you wonder why you got up this morning like I did and it popped higher, it's because the PMIs were stronger. Let me take that back. Manufacturing PMIs for Europe were stronger. Services PMI, not so much, but that's good. You know, you need Germany and the rest of the European manufacturing powerhouses to be firing on all cylinders here, which was good. But we've it was enough to push the euro dollar back above 117. But, you know, I think that being below the 24% retracement, the 38% retracement is calling, which is at 115. The next support here will be at 116.35 if we continue to drop. Resistance now, and we're going to go to bearish. Resistance now as long as we stay below 117.50, it's bearish. Okay. I think this has to hold for us to stay bearish. Okay. And, you know, in all actuality, I should probably put that it's not bearish. It's probably neutral, but, you know, I think near term it's bearish. Cable, we are holding the 200-day moving average. Barely. We're holding the 618 retracement. Barely. Okay. We were holding the 38% retracement. This is a confluence. Barely. So that means the lows today are very important. 126.75. Very important support. I think we're going to eventually break lower because we have a bear flag. You know, resistance right now should be right there, which is 127.75. I'm going to tell you something I did last night, and I didn't tell anybody I did this. It was something because I had to take my son to. He has goalkeeper. He's a keeper for his football team, soccer, football. So he had goalkeeper training last night. And he has it, you know, like these two tonight and tomorrow, or no, last night and tonight. So anyway, I took him to training last night. So after the market closed, I put in a bid to buy the pound New Zealand. Okay, last night because I knew the RBNZ was happening, and I knew that, you know, a break above 143 was going to be bull, or 190 or 193 was going to be bullish. But what I wanted to do is I knew it was going to break. I knew we were going to break out yesterday. All right. And if you, whoops, I'm already a customer. If you go to the pound New Zealand, you guys hear Amanda's voice when you guys log in, just so you know. Pound New Zealand. Pound New Zealand has broken the channel resistance and looks to test the 194 level next if broken. The 195.20 level at the 30. That was today. The descending channel may be capping the rally, but a break of the 193 level would be very bullish development for the pair. And last night, following the RBNZ, or before the RBNZ, I'm like, man, this thing's going to break out. The Kiwi's going to get hit following the RBNZ. Surprisingly, it went up, then down, but I thought it was going to go down. Anyway, so when it went up, I put in a bid because I was going to play this as an inverted head and shoulder pattern, right? And so I put in a bid to buy the dollar, the pound New Zealand at 191.62, I think is where I got. And it was only a half size position for me. It was small. But I wanted to buy it there and then buy it on a breakout. I didn't play this too well because what happened is when I was at my son's goalkeeper training, it dropped, triggered my long. I got long, and when I got home, we were trading at 192.20. So I was up like 70 pips or something when I got home. And I'm like, God, you know, I should probably just take those profits right now. I don't, you know, I should probably just take it just because, you know, I don't want to wake up and just give that all away. So I did. I took it off the table and I got up this morning and here we are breaking out. So the point I'm trying to make here is the point I was trying to make, you know, regarding like the, you know, talking about the cable. The one thing I was scared about, and this is one of the reasons why I sold the pound New Zealand last night, even though I was up 70 pips, I should have just moved my stops to break even and not thought about it. But I knew that the cable is really close to this 200-day moving average. And I figured, man, if we break through this 200-day moving average, things could get kind of ugly. And I didn't want to have, you know, a position on if that happened. But that's what I was trying to point out, is that's why I took that off the table, which in retrospect was a bad decision. I should have just moved my stops to break even, and I'd be up 150 pips right now plus. And no, I played it like a schmuck. Anyway, hey, look, I tell you these stories because I just want you to know that you're not the only one. You know, if you make trades and you're like, dude, I made such a bad decision. I make bad decisions too. They may seem right at the time, but you know, hindsight's always 20/20, and you can't beat yourself up.
We're human. We're always struggling with our psychology.
Yeah, we always are. You know, I mean, I
do. I call my psychiatrist a few times a day during market hours.
Yeah, I mean, look, you know, when I get up, there's a lot of times I mean, almost daily actually, I get up in the morning, I'm like, oh, I should have done that. Oh, I should have done that. Why didn't I do that? I knew that was going to happen.
But we know where you don't live.
I do not live in shoulda, woulda, coulda land. That's right. That's right. 71.80 is going to be resistance for the Aussie. 71.80 is resistance. We are bearish now because we are out of this channel. Finally, we knew it was happening. You guys saw the evolution of the Aussie dollar over the last month. We went from bullish to range for the last several weeks. Now we're turning bearish. All right. It's an evolutionary process of a trend change, right? Next support for the Aussie is going to be right here at 70.70. Okay. Kiwi.
Also, Greg has a nice pip going in Aussie.
He does. Double top, Kiwi. Break of 60. Oh, you're right, Dale.
He took a little heat for a while, for a week. He had to live through a drawdown.
Greg put in, he put in this pattern in play on the 10th, 2 weeks ago.
Yeah.
So yeah, really good stuff. Kiwi double top, channel support. The Aussie already broke channel support, so Kiwi would be next at 65.65. That's going to be important. We have to stay range right now because even though we got a double top, and I feel it's going to break down just with dollar strength in general, it still is range bound while we're in this channel. That's just because it's borderline going to flip to bearish. So will it flip to bearish today? I'll find out tomorrow. While we stay below 66, there's it's really right here at 66.5. You see the previous spike here. 66.40 should be resistance on rallies. Dollar Canadian, you guys know, is I don't have to beat this up because we already talked about this. Bullish while above one. You know what? I'm sure a lot of you guys are probably like, I was going to write 132.60, but it's really 132.84. 132.80. Whoops. 85. Next resistance of the 24% retracement comes in at 133.95. So basically 134. Okay. Dollar switch. Well, we're going to here. Just go to the peso. Peso absolutely just ripped higher. Hopefully you just weren't caught short that thing because as soon as it broke, last night we were right here. It's 21.70. I actually had a bid to buy dollar Mexican peso at 21.60, just below. I'm sorry, just below where it was at here. I thought we would come back below this. The peso actually, you know, like you see the support resistance. Usually it doesn't act like that. It usually doesn't go right to the pip and then reverse. We get overshoots in the dollar mex quite a bit. You can see like an example would be here. You know, you get this overshoot, then it reverses. You know, So I thought we would dip a little bit further, and I had a buy order in dollar Mexican peso here. Obviously didn't get triggered, unfortunately, because now we're broken out. So any dip now back to, well, you'd be really lucky if you got 2180 now. We're bullish. Now you're like, wait. We're in a downtrend. Why are you bullish? Because we broke this multi-month trend line. So now resistance should be 22.22. Okay. Moving down. Dollar Swiss. You guys know 92 cents, right? That was resistance before, but I said, hey, we really got to get above 92.50. You can see the struggle we're facing as we get up here. 92.50s or 92.50 is going to be a big deal. Support. I'm going to write down 91.40, because if we go risk off, it's to be seen, but I think the Swiss franc and the dollar yen could strengthen here. Now, dollar yen, let's pay attention to this one. I'm not trading it right now, but you'll notice we are at the 38% retracement. 50% retracement comes in at 105.46. Previous support there, 105. I'm just going to write down 105.50. And remember, we had a false breakdown here, so be careful being on the short side of this. I'm not completely sold that I need to be short, but I don't know if I necessarily want to be. Let me say that again. I'm not necessarily sold on the idea that I need to be long, but I don't think I really want to be short right now. So 104.85 should be support right now. Dollar index. Okay, we're above 94. Previous support comes in at 94.60. In my opinion, while we're above here, which is basically 93.50, we're bullish. Okay, I'm going to say this one more time before I wrap this up. Okay, give me 1 second, guys. So I don't ask for much of you guys, but I said this earlier, and I'm going to say it again. For those of you that retweeted this tweet, I appreciate it. This is my last tweet an hour ago, and there are hundreds of you guys listening in right now. Hundreds. Like hundreds of you listening in right now. And I've got 28 retweets. Thank you so much for the 28 of you that retweeted. But look, we're here every day for free. We don't ask for much. But this is a big event this weekend. And if you could do us a favor, if you're on Twitter, retweet that message, please. Like I said, we don't ask for much. I hope that at some point you'll become a ForexAnalytix subscriber. That's always my hope. But, you know, I don't say, hey, you got to be a ForexAnalytix subscriber so you can listen in the face webinar. Do we do that? We don't.
I've recommended it.
Huh?
I've recommended it.
I know you recommended it. But we're here every day without fail, you know, and you guys can listen in and, you know, hopefully you do well. You know, you continue to listen in. So I'm assuming you like it. So do us a favor, retweet it. Okay.
Retweet already, guys.
Thank you. I appreciate it. No,
right.
Okay. I'm going to finish up the analysis here, and then I'm going to pass it over to the guys.
Right.
U.S. dollar, Norwegian krona. This one's bullish, and you guys know as soon as we broke 920, it was bullish. Now we're above the 24%, or excuse me. This was the 618 retracement at 938. Next stop is going to be this resistance right. Well, we have previous support here that we're going to come up to. So I'm going to write that down, 943. It gets a little trickier here. Dips down to 920. See that little breakout point right here, this little pink line? You guys can see it right here, right? That comes in at 925. $943. Bullish. Gold. Gold.
Always believe in your soul.
Yeah. What?
Come on, Spandau Ballet.
That one totally went over my head. Totally
you know
went
the
over
song. You know the song.
Goldfinger. He's the man.
Song.
That's probably another song.
That is another, yeah.
I don't know any of you guys' songs. You guys all have crappy songs. 1872. Sorry, I'm just trying to wrap this up.
I like the song, Stell.
While we are below 1920, we have to be bearish now. Remember, that was the previous all-time high. So now that we're below 1920, oh wait, this is 1972. Next target would be 19 or 18. 1825. That'd be the next fib level. S&P. And you guys are probably sitting there going, wow, the dollar hasn't even really moved because the S&P hasn't really moved either. Yeah, let the S&P correct another 3 or 4% and see what happens to the dollar after that. 39, we'll write down 39.4 or 33.40 being resistance. My opinion is we're still range bound. Support today will be 32.70. Okay, your bias chart's done, finished. You see it. You see the dollar flipping around, becoming bullish against a lot of different currencies. It's been a pretty big change of pace, don't you guys think, over the last couple of weeks?
Yeah.
Right? We've seen it flip. We've seen the bias chart flip. There's a lot of you guys that save these every day. You know when you take like what do they call that animation when you have cards and you flip through the still animation? Is that what they call it?
I don't know, but I know what you mean. Yeah, I know what you mean.
You know when you have drawings and then you flip through the cards and it's like it's like animation, right? So if you took like the bias charts and you printed them out for the last 2 months and you flip through them, you would see that the euro dollar has gone from bullish to bearish. For the last 2 months, it's kind of it started to really take hold. The last 4 or 5 weeks as it would flip from bullish to neutral, and then now it's to bearish. So you can see that the trends to the dollar are becoming more bullish as we go on. So anyway, I want to thank all of you guys for the support. You guys that retweeted me this morning for this Traders Summit event, 49 of you, thank you. Like I said, there's hundreds of you guys listening. I don't ask for much, but if you guys could just retweet that, I appreciate it. Those of you that did, I really appreciate you for doing that. I'm going to pass it over to my colleagues, Steve, Stelios, Dale, Greg, I think, is popping in today.
He's.
Oh, wow. Greg has got something to say. He's here. Can you hear it now, Dale? Ready?
Yep. Yeah.
Toot, toot. You hear that? That's Greg tooting his own horn about his Aussie short up 2%. And by the way,
he deserves a victory lap.
He deserves it. He deserves to take a victory lap because the dude just had knee surgery and he was hopped up in a bed. probably on all sorts of pain meds, and he's still, you know, calling shots from the hospital bed. So he should toot it a little bit. All right, guys, have a great one.
Nurses helped a lot, I hear.
Yeah, they probably do. All right, guys,
Keep your fantasies to yourself, Steve.
Thank you, Blake.
Bye,
Okay,
Blake.
so we have
Good luck,
Gregor
Blake.
coming up. I have a couple of things to say quickly, and then we can have him on. So, like Blake said, we had the RBNZ interest rate decision. They said that risks are still skewed to the downside, and they reiterated the fact that they might use negative rates going forward, and more because, you know, they work. So,
so we need to do more of it.
The interesting thing is that the Kiwi did weaken, but it's in line with the Aussie and with risk in general. So it's not collapsing, but it's obviously not doing very well on the back of that. We also had some numbers. They're still not terribly important, but they stack up. So we had PMIs from France and Germany and Spain and Eurozone in general. And manufacturing was better than expected. Services was worse than expected. Overall, you know, the composite PMIs probably marginally worse. So, you know, the recovery story was still overall marginally on the above 50, but you know, it's not galloping ahead. Let's put it that way. And the same with the UK. Manufacturing beat, services missed, but they are a little bit higher. They're near the 55s. But you know, just something to keep in the back of your mind that you know, PMIs are slowing a little bit. The rate of recovery is slowing, and that was it data-wise. And then, you know, just the main thing I want to point out again is that, you know, we're seeing the dollar recover. We're seeing a little bit of risk off, but just like Blake said, equities are not really yet joining the party, and I mean joining the party to the downside. So what happens if or when equities start having a proper leg lower? You know, the dollar should be squeezing, and like Blake showed, you have so many currencies which are on the brink, like the CAD and cable as well. You know, we're on thin ice. So, you know, I think we need to always keep an eye on equities, and you know, if they look like they're going lower, then currencies should continue and the dollar should spike a little bit more. And you're seeing Nordic currencies like the kroner and the Swedish and the Norwegian, they're not doing well at all, and they're usually a nice indicator of what's coming. So that's it. I didn't have that much to say elsewhere. We have Chairman Powell testifying more later today, and some PMIs out of the US, but nothing major. So we can bring on Steve or Gregor, whoever is ready. And
sure, I mean, I want to give time to Gregor just before we start. Gregor,
yes.
One of the things I wanted to talk about, and I know that you're closely monitoring them, is I find it quite interesting, and perhaps you could start from there today, that Aussie pairs and Kiwi pairs are at the precipice of a breakdown. So here's the Aussie backtesting this long-term broken trend line from this channel as support. Here's the Kiwi testing this channel's trend line support. Here is the Aussie yen testing this channel's trend line support, and here's the Kiwi yen testing this triangle's support and horizontal support area. So why don't you grab the screen and perhaps start from there today?
Sure. Okay, perfect.
Yeah, we see you.
Okay, so let's take a look at New Zealand dollar. Actually, from an Elliott wave perspective, I think that this is probably the beauty of the structure. I mean, it looks like a textbook pattern. You have a sharp reversal here from March lows. You clearly have 5 waves up, and this,
ending diagonal, I see.
Yes, this bullish move was finished with an ending diagonal, and I've been highlighting this reversal on Monday after confirmed breakout here of this trend line. And we know that normally ending diagonals are slow and usually cause a very strong movement, increasing momentum, normally in the opposite direction, meaning that price can even retrace all the way back to the starting point, which was here at the former wave 4. So technically speaking, this could be very good support actually once we have 3 waves of a pullback. Now, for now, this retracement is still underway, meaning that for now we just have to focus on more weakness. So I'm actually ready to look for potential shorts on this pair if we will see any solid bounce. For now, we are still just waiting on this first low, swing low, to be formed here. It's very hard to say where wave 1 or maybe even wave 1, who knows, will finish. But I just think that the next bounce could be a nice opportunity to short. It really depends, obviously, how far this current first leg will go. I mean, the market is definitely positioned currently for very strong dollar move. So we will see what happens with stocks. I mean, I'm still quite careful with overall dollar view. We have only 3 waves up on dollar index, so let's not turn bullish too soon on across the board here on the US dollar. I just think that these are all still only corrective setbacks within a higher degree, higher dollar weakness. Okay, so if we take a look also on Aussie. The Aussie so far is moving nicely to the downside. I think that there is room for another 100 pip drop towards 0.7 psychological level. You will see here you have the 38.2% of this wave. Let me just zoom this, of this wave 3. And then you have also this wave, sub-wave 3 swing high coming right at this zone as well. So in such case, I'm not looking now for retracement all the way back to the previous wave 4 termination point. Why? Because this lag, the wave 5 that went out of this triangle here, was extended compared to other lags. So in such case, the current wave 4 degree may not retrace all the way to the starting point, but only to the to the end point, but only to the starting point of this wave 4. So I think that this is quite interesting support down there. And if we maybe stocks we see trying to pick up and maybe, who knows, even rally further from here, then I think that Aussie dollar, if will also maybe stabilize, could even be interesting on the long side. If we see other markets obviously as well turning in risk on mode. Okay, this is just, for now, it's just an idea. Definitely, we have to see firstly a completed wave 4. What I mean by a completed wave 4, well, if you're tracking an ABC correction, which I'm doing right now, then you have to, then you need to have 5 subwaves also in this wave C, because this is a motive wave. Okay, so it looks like an impulse, but you need still this wave 4 bounce and then another drop. So for now, Aussie still remains bearish here, and as I said, this 0.7 level could be actually still seen in the next few days maybe.
I'm assuming that within that context, though, we might extend lower, meaning, I mean, can't we have like a more extended wave 3 for C, or a more extended like wave 5?
You mean that we go much deeper within this? I mean, in such case, if we go much lower, I would say that this...
Not much lower, but perhaps towards like the 67, 76.
Yeah, I get
low.
your point, yes. In such case, I mean, it's definitely valid and possible. In such case, I would just say that this is not a wave 4, but probably it's a higher degree wave B or wave 2 correction, meaning that I would be looking here for this alternate count to be a top of this 5-wave movement. So it's totally valid, but even if before we may say that bullish trend is back, that again bulls are here, we need to have a proper price action, confirming price action. This is always what I'm repeating over and over again through my videos, and this means that only when I see a 5-wave rise from the lows, only then I will say that market is turning bullish. Until then, it's just an assumption where we could stop.
Okay. I also showed you the yen equivalents, testing key supports. I'm assuming that before we talk about them, perhaps you can give us a little bit more clarity in what you think is happening currently with USD yen.
Yeah, I mean, dollar yen is somehow it lost very good correlation with stocks. And this is fight between the dollar and yen in risk off and risk on moved. I mean, both are actually safe havens, obviously. So dollar yen can be sometimes very tricky. But looking at here at this longer term structure here on a daily chart, I mean, it's very hard to label this different than a complex corrective decline. Okay, it's very, very hard for me to say that this is a bearish trend that we go back to March lows. I mean, it could be actually a very nice bullish pattern, especially if we can rise back above 106.50. The question is what will happen with overall dollar view. Maybe this pair will then be linked with higher stocks and dollar would still be maybe pressure to the downside, who knows. I mean, dollar index in general. So from a poor Elliott wave perspective, I'm thinking about potential low that could be forming, but again, we need to have 5 waves up from those wave C levels. I think that at the end of the week, we will have more clear view of what is really going on here.
Okay. Yeah, and obviously what happens with USD yen is going to affect all the yen pairs greatly.
Yes, but not necessarily the dollar pairs.
Speaking
because of the yen, yes.
Speaking of stocks, what do you think is happening as we speak? I mean, we found some type of a low yesterday. What kind of a low is it? Is it, in your opinion, the low? What is it?
Yeah, I mean, it's a very, very tough question. I'm not really sure and really convinced here, honestly. I can easily label this bounce in 5 waves, as you can see.
Yeah, I've seen better 5-wave moves, though. I mean,
yes, yes, but it's a valid structure. Okay.
Yes, it is.
And also, maybe you could label this as a complex correction, and you see this as a wave 4. In such case, if this is wave 4, you will have another move to the downside, and then a rise
for an ending diagonal to finish up a corrective move in ABC.
Yes, and from psychological point of view, I know that a lot of traders are looking for this correction to go to much lower prices. And once we breach a new lows, I'm sure that only a few of them will be really prepared on a potential bounce. So somehow I really love this structure. And if I also compare wave C to wave B, you will also have some very similar length here around those.
No, I'm with you. Even from I mean purely a logical perspective, I'm expecting, we're getting very, very close to the elections. I'm expecting a lot of headlines, positive headlines to prop up the markets. And, we know that, this market can't easily ignore, such headlines since it's been in a buy the dip mode since like 12 years ago.
Yeah, and historically, always when there was US elections, markets somehow had actually finished the year quite well. So, so we'll see what happens. Also, I mean, I'm looking at the markets based on probabilities, not on possibilities. We are bullish on stocks, and if I do not see 5 waves down from the highs, I will try to label each pullback as a correction.
As corrective, until proven otherwise, yes.
Of course, and this makes sense. I mean, I was bearish when I saw this first 5-wave drop here down to the start of September, and then I was looking and expecting more weakness. But based on the current development, let's not forget that this current weakness is, just look at the angle of the current drop and compare it to the first leg. You can see that this current drop current angle is totally different. The first one is very sharp. The second one is not.
Momentum has totally definitely slowed.
Yes, so it's not that kind of a price action that you would typically expect in a strong bear market with an impulsive characteristics. And if we consider also some other factors. I mean, let's take, I think I have this one here. I can take a look at the Euro 50, this stock index. I mean, this is the very clear Elliott wave pattern. You have 5 waves up from those March lows. You have seen the first reversal from the highs, clear wave A. More importantly, you had a triangle in a wave B, so you're expecting a drop to this to be wave C, because this cannot be wave 2. I mean, it's a perfect wave pattern, and I would not be looking for any aggressive sell-off. Still, I would level.
You know how many people are looking at this and they're seeing a big head and shoulders formation or a rounded top, right?
Yeah, but if this has been, I mean,
no, I mean, so you understand that if another leg lower is corrective, there's going to be a massacre. A lot of people will pile up in the bear side.
Yeah, I mean, I really love the head and shoulders pattern, but if you know in which Elliott wave pattern is, you have much better chances actually to be right which head and shoulders pattern is actually forming a low or forming a bottom. Okay, because in such case, considering that we could be maybe potentially headed down for a wave 4 support and then rise, because we are in a wave C, and wave C will be similar in distance compared to the wave A. So with the head and shoulders pattern, well, you would expect that lower,
the target would be much lower.
Yes, and I agree with those targets when I'm expecting a sell-off to be wave 3, not wave C. Mm-hmm. And so because of this pattern that I see 5 waves up from those March lows, I would not be looking for any aggressive downside levels. I mean, I just see and tracking the wave structure.
Yeah, I'm with you. I think all this inflation will keep on driving asset prices higher, even with economies being at a bad situation. Yeah. I mean, it's likely, it's not certain, but it's likely.
And also, let's take a look on gold. As you know, I've been looking for a break out of a triangle on gold to the downside.
Got that.
Yeah, and we said back then, I know that a lot of, again, here is maybe advantage for if you know the Elliott wave substructures. I know that everyone saw a triangle, but it was tricky. Is it a triangle in a wave B, or is it the whole corrective movement from August highs a triangle? And back then we said, well, if you look at the daily chart, you see a very sharp drop. This looks like an impulse because it was a very quick move, sharp move in a very short period of time. So we said probably that's a first leg. You have the second leg complex, ideally wave B, you will get a drop into wave C. And again, I'm sure
you did say that last week from your hospital bed, I believe, and you were ahead of the breakdown.
Yes. So actually,
nice.
Actually, I think that this current pattern can also suggest where are we headed. Now, metals and stocks have been recently quite well trading together. I know that maybe gold may not see such a big drop if suddenly something extreme risk off happens, but still I think that this pattern is very clear, and it indicates that we are in a correction here and that we could actually see a bounce because, as I said so many times, we have a triangle here in a wave B.
Yeah, my targets remain to the downside, 1820 and 1760.
Yes, I mean, 1800 is also a very nice level. I mean, here I'm still observing this 100 moving average here on a daily chart. It's been the case and very important since we turned bullish here back in 2019. Always when we make a pullback and retest it, we rallied. And maybe now we will see the same situation here. We are not far away from that level. And again,
is your thesis still that the long-term picture is that this move higher is corrective?
No.
Oh,
this
okay.
Move higher is impulsive.
Okay.
I'm looking for this for some time now.
Because I can tell you as a fact, if gold doesn't resume a multi-year uptrend, I'm going to eat my hat. Anything, any way you want to view it, there is no way that gold can really move much slower. Even the people that say don't fight the Fed, yeah, if you don't want to fight the Fed, buy gold. As simple as that. So gold has all the fundamental reasons to move higher and all the monetary policy support to do so. Okay, so what is your, by the way, what is your long-term upside target in this structure for gold, Gregor?
After this wave 4 pullback,
Mm-hmm.
I would probably looking for 2,300 around there.
Okay, and then like
And then
probably a three-wave down or a big consolidation or something like that, right?
Yeah, probably back to these highs that we have seen in 2011.
Do me a favor, don't tell Henrik because he's going to have a heart attack.
Yeah, I mean, I'm just following the price. I'm not drawing these charts. I mean, I'm just, if I see the uptrend, if I see higher highs, higher swing lows, well, clearly statistically you will have better chances to be right if you're just trying to label the wave count in the direction of a trend. Clearly is that.
Yeah, I'm totally with you. Dale, do we have an interview or Gregor has more time?
I'm looking for Joe. If you could say something in chat. I'm not sure how you registered in here.
Okay, until Joe
Since
says
you
something in
used
chat
a
then.
pseudonym.
Gregor, we've seen a much sharper pullback in silver. How do you count this? I also think it's corrective. I'm actively looking. I do have gold, but I'm actively looking to buy silver as well. How low do you think we can go? My target has been 23. The next downside target 23, and then 21, and below that 19 and a half. Where do you think we stop?
Well, I think that this trend line support is very important if you connect it back from March, and comes in perfectly here at this potential wave 4 pullback. You are now between 38 and 50%. So basically you are in that area. But again, the wave C is not completed. This could be seen, let me label this as a wave 1. You have a wave 2, expecting wave 3, wave 4 bounce, and then
one
a
more,
final move. Yes.
Perhaps $21 then or so.
Or 22, 21, 22 around there. Yes.
Equality target from the first is at 22.40.
Okay. Yeah, I got you.
Yeah. So perhaps there.
Yes. And I mean, if you just, maybe it's not wave 4, maybe it's some different type of a higher degree correction. But I think that the important thing is that we have a trend line and you have wave C to A at the same spot.
Mm-hmm. Personally, you know, if some people are looking for a long-term, you know, investment in silver, I think starting to buy here at 23 is not a bad idea, and you know, you can scale up as it moves, you know, towards like 21. I mean, cost average of 22 is not bad.
Yeah, but they should realize that still, even if this is already a completed wave 5 up there, you're still in a corrective movement, and in such case, we could extend maybe even lower if this is not a wave 4. In such case,
personally, and I can only speak for myself, yeah. I'm not worried at all having silver and being out of the money for a small period of time. And by small period of time, I mean even if it's months, I'm totally fine with that.
Yeah, sure. Markets needs time for sometimes.
Yeah. Dale, any luck with your guest, or can we continue?
I'm communicating with him on Twitter. You guys still until he.
Yeah. Okay. Perfect.
Also, I want to, because I said earlier that Aussie dollar maybe could be headed down for a wave C. Now it's still incomplete. Now stocks maybe could be making a corrective retracement as well. Not necessarily that we bottomed already, but in such case, I want to look at the Euro Aussie. Okay. Now, let's say that Aussie dollar completes an ABC setback. Let's assume that this happens, of course, at the same time when stocks are recovering as well. In such case, Euro Aussie would again be very interesting for more weakness. Now, we all know that this is risk on a risk off pair. So if you see this market falling, traders are more interested in commodity currencies because commodities are also rising when stocks are up. So that's why Aussie could benefit. Well, now this market is sideways, even up from this lower trend line support because we have seen a shift to a risk off. So if this current shift is just temporary, well, then I think that even this current formation, current sideways price action is also temporary. I'm looking this to be maybe a triangle in a fourth wave and expecting more weakness. Let's see what happens up there in this current zone, 61.8%, and this end at this upper trend line. If we can reverse this current gains, let's say by the end of this week, then I think that next week we would
I have the same type of formation that you do, but I want you to see something else that I've been tracking here. I think that it has some merit, it has some interest from a technical analysis. Let me grab the screen and show you.
About Rsi.
Yeah, look at this.
Okay.
So look at this channel. I know that we've had that, you know, explosion higher, but other than the period of the explosion higher, I'm still tracking this channel, which even when you extended it, it's quite interesting.
Yeah.
You know, I refrain from being bearish as long as this channel's trend line support is still holding. So you know, I'm paying attention to that. What do you think about EuroKiwi, by the way? EuroKiwi seems to be somewhat more complex here. I was tracking this breakdown from this channel. You can take the screen back, by the way. What do you think about EuroKiwi? I mean, definitely doesn't look the same. It's because, of course, the Kiwi has, you know, has been underperforming the Aussie for quite some time.
Okay, let me just look really quick. Maybe this is some kind of a flat formation here. Maybe
yeah,
like
it's
1, 2, 3, 4, 5.
And an ABC, yeah.
Yes, an ABC. I think that.
Yeah, and lower.
That obviously, if if this is going to be a flat correction, we have to respect this resistance at the wave A. So in this zone, we definitely should see a reversal, or maybe up to 61.8%. That would be your area. What happens up there? But if this again stocks are really going to find a support and some buyers, then I think that these commodity currencies could again strengthen.
Okay. Is
also,
there, before I throw some questions to you, is there anything else that you... Oh, crude oil. Not a bad idea, actually.
Yeah. I mean, crude oil, we've been looking for this turnaround after this formation of an ending diagonal here for a wave 5. We have seen a very sharp sell-off, and this is the type of the price action that we discussed earlier on New Zealand dollar. When you have an ending diagonal, volume and momentum increases in the opposite direction, actually prices move and could move back to the starting point. And you can see that this actually came pretty close here on crude oil. And now, since we have only first leg down, well, we have wave B, wave C still missing, in my opinion, to complete this correction. So I will be looking for more weakness. I'm just wondering, whenever we get this overlap with the 38.70 area, if I just show you on the 4-hour chart what that means. Well, if we can make an overlap with this price,
then lower, yeah.
Then this weakness, I think, would be confirmed because you would have rise only to.
Yeah, I was talking about it the other day. I don't remember if it was yesterday or the day before. That would signal that the move lower in stocks is probably not over.
Yeah, it could, definitely. Maybe we get that wave 5 down for an end.
Yeah, along with crude oil breaking down for a lower low.
That would be almost textbook correlations.
Yeah, natural gas has gone wild. I don't know if you've been watching it.
I've been watching it at the start of September, but I haven't been tracking because I was turning bullish. I saw some very nice recovery, and I know that.
Yeah, I actually traded it. I bought it. I bought it at the breakout from 205.
I got lost on the wave counts. I didn't know what actually is going on, so I just left it on the side for now until I see something clear there.
Trying to put on a nice morning star formation on the
My
daily, by the
guest
way.
is here.
Okay, Dale.
Okay. All right, thank you, Grega.
Thank you, Grega.
Thank you, Steve.
We know what to do everywhere now. Thank you, buddy.
Thank you.
Okay, Joe, I'm going to get you set up now, promoting you to a panelist. I'm unmuting you. Welcome to FACE, Joe.
Hey, thanks. Appreciate it.
Nice to meet you. I appreciate you taking time out of your trading day. I assume you know how to use Zoom, and you just share
Yeah,
your screen.
I would make that assumption.
Okay. Well, it's that green share button, and then you can share your screen. See it? Drop down menu. There you go. All right. So before we get started, Joe, I just want to ask you about your handle. Why did you select the pseudonym Joe Friday?
Oh, well, that comes back to my prior career as a police officer in the New York City Police Department. So
Okay.
I was a detective, and so Joe Friday, as you know, famous detective from the LAPD. And I thought it was as good a handle as any. Dragnet, right?
Yeah.
We're dating ourselves now because
That's
not too many
okay.
people know about that.
That's okay. So what about the 714? What's that about?
That's his badge number. That was Joe Friday's badge number.
Oh, okay. Yeah. All right, because they used to put that on Quaaludes. Anyway.
Yeah, you're absolutely right.
All right. Anyway, you know, the people that don't remember Dragnet don't remember those either. So,
yeah.
Joe, anyway, you know, I appreciate you being here today. So, you know, you already answered one of my questions. Did you have a long career as a police officer in New York City?
Yeah, I did 20 years.
Wow.
I got out right after a few months after 9/11. Unfortunately, I was there for that day.
Yeah.
And this is actually a third career, if you want to call it a career for me, because I was actually an attorney after I became after I retired from the police department. I had gone to law school at night, and then
Wow.
I went from the rubble of the World Trade Center to a nice shiny office on Madison Avenue. It was quite the culture shock. And then when I stopped practicing law, I'd say it's about maybe 6-7 years ago, I started trading more full time. Had been doing it as a hobby more or less before then.
Okay. And let me ask you, you know, just like, you know, when you're in any career, you usually have a mentor or someone to show you the way. Did you have any mentors or any books that were a big influence on you so that you knew how to draw megaphone patterns like we're looking at right now?
Yeah, well, to be honest with you, I'm basically self-taught. School
Okay.
of Hard Knocks. I read a lot of
that
books.
University, yeah.
Yeah, that's right.
We were in the same frat house there.
Yeah, there you go. There you go. But really, just do my own due diligence, so to speak. Looking at various videos, like everyone else. You know, I read some books. I joined some services, which I won't get into,
Crummy.
but they were, you know, not all cracked what they were cracked up to be. And I wish I had someone like me, to be honest with you, around when I was learning the trade, because you know, I'm sure, like many of your guests, they'll tell you the same story I had, is that you start off and maybe you have like two good trades, you think you're nailing it, and the next thing you know, the bottom falls out and you blow up your account. And I blew up my account, Jesus, I got to be 3-4 times. You know, I'm stubborn that way, you know. So,
yeah. Understand it. Been there. You know, you did have major commodity exchanges that were still kind of active. You ever go to the floor and check things out? You probably were trading casually before you became a lawyer, and you know, probably had a pension and had an interest in the market. You ever go down to NYSE or COMEX?
no, I used to work right around the corner from Wall Street. So, you know, I visited the floor and stuff, but really my interest started because the police department had a part of their pension was self-directed. So I was able to kind of manage my funds. And I had actually met an older guy who was on the job, and he was getting ready to get out. and he had been in this for a while, and he started telling me how he was basically, switching in funds depending on what the market was doing, and he really caught my interest because he was really making very nice gains at that point. Because back then, if you were getting 5 or 6%, you're doing well, and he was doing like,
well, today too, with a 1% bond rate, 5%
right,
is
well,
nice,
that's true.
right?
But back then,
Yeah.
it was the bond rates were higher, but he did very well for himself, and he would, if the markets were up on in the U.S., what he'd do at the end of the day, he'd close it out and go over to a Japanese fund and hope the Asian index would follow the U.S. and get out the next day. It was like brilliant. Until they stopped it, then they wouldn't let you do it no more.
Yeah. Oh yeah, I know some people that were doing that mutual
Yeah.
fund switch after you already knew what Europe was going to do the next
Correct.
day or something like that.
Yeah.
Let me ask you, as a trader, are there any similarities between what you learned in your prior two careers that really apply? I mean, as a police officer, risk management's about your personal safety. Did that at all come in where you kind of measured the risk and you have a strategy based upon what you learned early in your career as a law enforcement officer? Could you apply anything to it?
Well, I think if I can apply anything, it's going to be the ability to anticipate. And both as a cop and a lawyer, you train to anticipate. As a cop, what may happen when you arrive at a scene or an incident, and as a lawyer, you're anticipating what your opposing counsel is going to do next. And so that kind of transcended in trading for me, because part of what I try to teach the members of my blog is that, look, try to anticipate the market. If you wait for the reaction, you're already behind this. You're already behind it. So I always say, anticipate, not participate. And so that part, I think, if anything, is what helped me. Risk management, I think, is really very important. That's something that I wasn't, I want to say, gifted with that because I'm more of a risk taker. So that did not bode well into my early days of trading. But I've learned my lesson. The market teaches you very well, and it does not spare the rod, so to speak. So.
Okay, so you're a believer in this pattern that you're showing us here, this megaphone formation, that, if you were anticipating it, you would expect a decline to 0.6 down there, maybe sometime next year. What would change your mind? We had a megaphone formation going into 2018 where it blew above the top megaphone line. Right. And then got back inside of it after COVID. If you just made an adjustment with the line, you would see it had a throw over. What would change your mind about this megaphone pattern?
Well, like all patterns, I think it's really just something that is potential. And what I try to teach everyone is to just take it level by level. So that's why you see all these different levels on this chart. The main level, obviously, is the green and the red bar there. That's the broken. That was resistance, then broken resistance became support, and then again. So that is really the big support zone in my view. If that holds, then we probably could bounce from there and go higher. You could also see that right now, this is the weekly chart. Price is just above my green moving average there. And so that is also going to act as support. But if that breaks at 3130 area, let's say, that would probably open the door to a test of the high.
Okay. What's the period moving average on that, Joe?
Well, what I use, what I particularly use here, that is not even really a moving average. It is what they call well, I call the RSI moving average. And what that is if I take my I think I'll show you one second. Yeah,
I've never heard of that before. People using RSI on a moving average basis. That's interesting.
Yeah, it's called the reverse engineering RSI. Thinkorswim has it. Basically, what it is a 30 EMA, more or less.
Okay.
Not quite the same, but almost. So what that does is, I believe I'm a big believer in less is more on the charts. So I don't like a lot of indicators. I don't like a lot of things on my chart. I like a clean price action as best as possible. And so now this helps me get rid of my RSI at the bottom, and I use a MACD actually just for trend and for divergences. And then I have, you can see on the upper left, I have an RSI box that just tells me what it is. But basically what happens is when my view is when the price is above this RSI, you lean bullish. Doesn't mean you can't go up and down, but the trend is higher as long as the RSI is below price, and vice versa. Once it breaks below, that also makes it lean bearish.
Where's it coming in now under this weekly candle? The RSI dotted line.
Well, right now, it on the right-hand side, it's 3195, 3194.6. You see the green box over here.
Yeah, but what about like this last candle we're having? Where's the RSI coming in? Right underneath the last blue candle. I'm curious, price-wise. Keep going.
Oh, you mean here?
Yeah, right underneath it. Yeah.
Oh, well, the low was 32.23, it looks like.
And the dot underneath it.
Well, that's what the green sign is, 3194.6.
Oh, okay, 3,200.
Yeah.
Okay,
right,
yeah.
That's showing you the last price, right?
Okay, that's an important level for me.
Right, but the weekly isn't done yet, so this could change.
Right.
But that's generally, and again, this is an area, as I tell everyone, there's no specific price level. It's just an area, so it could come shy, it could extend a little below it, but I use that generally as a guide. So, if this, if it breaks below that RSI moving average, that's going to be a bearish sign, in my opinion. Probably open the door to a test of this support, and then what happens here will tell us what will happen next. And then I have this other ascending trend line here that could possibly form this could have been an underthrow, but right now it's just I got it there in gray. So
okay, and all the different points you have with a 6 ahead. Is it just you're numbering the different points? There's no type of formation.
It's just the legs. No, okay. Right. It's just the legs. I think most of the time these megaphone patterns do about 5 touches, and then it'll break out or break down. So 6, if it breaks down, doesn't break above 5, and 6 is the target. And then you see I have my 2016 gap fill down here, which it still remains open from 2016. So whether it gets I don't know.
What price level is that?
Right on the right here. See, 1864.
18. Okay.
About 1865.
All right. Well, you would need one hell of a rally in the dollar for that to happen. Maybe new highs. And I actually saw a tweet you had yesterday with a box showing the Dixie where you gave the dollar the bias that we could probably come out of here for.
Yeah, I'll bring up the Dixie now. Is one of the things I was going to show you.
Yeah.
But let me show you the monthly first, because this is where it comes in. So I always do a top-down analysis when I'm trading, and here is the ABC pattern on the monthly Dixie. And right now you can see we've held this support pretty much. This seems to me to be a bullish underthrow at this point. If we get back above, and this is the monthly RSI moving average, you can see that at about 96.27. And it also coincides with that bottom rail of that channel. So if we get above there, I think it's a good shot. We're gonna see D. Now this could also just be a back test. So again, take it level by level. If it fails here, and maybe we'll go lower. This whole pattern fails, and you kind of have a similar, although opposite view on the euro.
Yeah.
See, so same thing. Yeah. This, we'll see what happens. So far, this has been rejected, but it could come back and try it again. But going back to the other chart that you were showing.
So the jury, a term the jury is still out.
The jury's still out, but again, we're taking level by level. Right now on the lower time frame, right, here's the 4-hour, and you can see that we've broken out of this box now. There's a big, long consolidation. Actually, if you look at the daily chart.
Yeah, that was a 3 drive formation at the bottom.
Yeah,
you see that?
And you see the bullish divergence here. So this was expected. Now, will it get above 95 next? I don't know. We'll see. But I'm just taking it level by level. But right now, it seems to be breaking out. And if it continues, I think, in my opinion, it's going to put pressure on downward pressure on commodities and probably the indexes, except maybe the small caps.
Okay, very interesting. And anything else you wanted to share with us today?
Well, I have different charts. I can show you like a smaller time frame for ES. You can see here I have a possible ABC in progress here.
Okay.
And again, higher highs, higher lows. Again, RSI moving average is a 4-hour chart. We're at resistance. And what I try to do is look for confluences of resistance and support. Yeah, you know the deal, right?
Yeah. So you're thinking we have a D, one more shot down, and then
Yep.
maybe a good rally here.
Correct.
After that.
If we're going to, if it's going to pull back here, this is the possible zones, PRZ, which is price reversal zone for D. And if we do break this low here, then we should head a little lower. Usually 78 to 100 is what my view is on these leg Ds. And I'm suspecting, again, we're right at that 3200 area where.
So you use everything. The ABCD is like a harmonic pattern?
Yes, I'm not really an Elliott wave fan. I think it's just too complex for me. It's too many rules.
Makes my head explode.
Yeah, and it keeps moving the goalpost. Makes me crazy. So I just use the ABCs. Either they work out or they don't. Pretty simple. And I try to use that in combination with support and resistance and any other confluence of indicators that I have. Again, divergences are big for me. I try to use them. They work about 85% of the time in my view. Very successful. You just got to have the patience. And also, waiting for the levels. Like, I'm not short here. I was short. I was actually stuck in the short for a long time. Just got out with a profit, and now I'm waiting. And if it gets down here, I'll go long. But I'm not sure I want to short this market just yet until it proves to me that it's going to go lower. And then if it gets into the zone, well, then I think you have a better risk reward for a long.
I like your work. I like your work, Joe.
Oh, thank you. I try to keep it, simple. Here's NQ, kind of similar view.
Yeah.
I have D here, but again, just support, and I also use supply and demand. I try to use, I try to use, a variety of things. It's not just one thing, but mostly it comes down to if I had to trade off anything, it's just going to be support and resistance. I mean, that's what it comes down to. So the patterns just help you identify potential setups and reversals.
Okay. Well, I follow you on Twitter, Joe, and your Twitter handle is @JoeFriday714. Is there a hyphen between the 714? I don't remember. Or is it just @JoeFriday714?
It's it's Joe Friday 714. I have if I go to my
and you have a group that you mentor, work with, kind of a community.
Yeah, I have JS Blog Squad, I call it, and basically it's a paid service, and I just share my trades. And if you like, I can show you a couple of trades results. I always tell everybody, the less indicators, the better, and the less people you follow, the better, because all you're going to get is a million.
You end up paralyzed.
A million opinions, and you really got to learn to rely on yourself and trust in your own ability. And once you can perfect,
I agree. So Ron Adler's given you testimonial saying it's a great service. And you know what happens, Joe, once you do an interview with me, like it or not?
What?
You're now my trading warrior, brother.
I love it. Thank you.
Pleasure. And I'd love to have you back too. I like your clean, simple. I'm a believer in Forrest Gump type of analysis too. Simple can still be powerful.
Yeah, well, simple has always been less is more, and I think that's what a lot of beginners, when I first started out, it was like, 100 indicators. I had 15 moving averages on the chart. It was just crazy where you can't even see price. It was like, but that's what they teach you, and you go to all these YouTube videos. Everybody has
not me. I teach a lot of RSI stuff, and 3 drive formations. And I'm a big believer of where did you learn 3 drive formations from?
Just from researching different patterns and technical analysis.
Okay.
I've read a million books and like I said, YouTube videos, and you know, if I like simple. So if I could find something that like, oh, I can remember that, you know, that's great.
Yeah, I learned it in the 70s from a guy named J.R. Hill. So, you know, I've been, you know, that pattern has really helped me and other people that, and like you said, if you're just patient and you wait for those, you do quite well. It's, you know, the impatience of thinking you have to do something every day. And, you know, just like Tom Petty said, bro, the waiting is the hardest part.
It is. And I preach that all. Oh, there goes the bell. I preach that all the time because that's another big thing to learn that we don't know as beginners, that you think that the minute you enter, your price has to go up, and I'm like, no, sometimes it's going to go the other way on you, and in fact, my method is when I enter a trade, I assume I'm wrong, and I only dip a toe in, and then as price moves against me, as it usually does, sometimes I'm lucky, it goes right up. A lot of times it doesn't. And I layer in. So I manage my risk by dollar cost averaging. Yeah, by scaling in, and it's worked very well for me. But I think it goes against the grain of what everyone is taught when they begin.
Yeah, don't add to a loser.
Correct. And
instead of build a position, still have you know 100%. Where you're wrong, and 100%. You have to throw in the towel.
100%.
Yeah, so it sounds like you and I are kindred spirits. I appreciate the time today, Joe. Nice presentation.
Thank you for having me.
And I'll get a hold of you on Twitter, and we'll book another date, you know, in December.
Anytime.
I'm scheduling for December now. Okay.
Anytime. And anybody wants to try the Vlog Squad, they can go to my profile. It's right there. I have a 30-day, $30 trial period. And, you know, if they're interested in learning more.
And if they misbehave in your room, you arrest them?
No, I just throw them right out.
That's right.
We have zero tolerance here.
All right, Joe. It's been a pleasure, buddy.
All right, my friend. Same here, Dale. Thank you very much for having me.
All right, everyone. That's a wrap. Remember, don't just count your pips, count your blessings. We'll see everyone tomorrow. You're very welcome, everyone. Adios.